This is the Daily Market Comment by Mario Sajikiriakos. I'm Christina Marujos, and thank you for joining us here at xm.com. The invasion of Ukraine has sent global markets into a tailspin. Europe and America finally took off the gloves and announced a new round of crippling economic sanctions against Russia. These include the expulsion of several Russian banks from the SWIFT international payment system and freezing most of the FX reserves held by the central bank. This is essentially a one-two punch from the West. It will deal a heavy blow to Russia's financial institutions and perhaps spark a recession, while also leaving the central bank powerless to defend its currency by preventing access to its own war chest. The Russian central bank raised interest rates to 20% today in a last-ditch attempt to fight currency depreciation, but the ruble still collapsed to a new record low. Capital is fleeing the country and Russian assets are on fire sale. Crude oil has been the best barometer of market concerns around this conflict. The prospect of sanctions constraining Russian supply has turbocharged energy prices, although Western powers have been very careful not to target the sector explicitly, fearful of the collateral damage on the European economy from soaring fuel prices. This is also why the euro is under pressure. The sanctions could come back to bite Europe by squeezing consumers and restraining the banking sector in countries with high exposure to Russian money, so currency traders are taking cover in the safety of the US dollar. All this is happening despite fading speculation for a 50 basis points rate hike by the Fed next month. Stock markets were hit by a powerful wave of selling as well. European markets are down almost 2%, while futures point to a similar loss when Wall Street opens today. One piece that doesn't fit the puzzle is gold. Bullion opened higher for the week, but has already surrendered those gains, which is strange considering that Treasury yields are also sinking. Looking ahead, markets will remain hostage to incoming headlines. The situation is very unpredictable, but one ray of hope comes from the peace talks that will be held between Ukrainian and Russian officials today. While they might not stop the war, they might be enough to lift risk sentiment. A lot of negativity has likely been priced in, and everyone is fully hedged at this point, so any piece of good news could have a tremendous impact in terms of calming the markets. This was a Daily Market Comment here at xm.com. Have a great week.